It's Quant Trade Edge, and today we're going to take a look at a trade that we posted in the room today in the Discord, where we made 9 times our risk on a trade in copper, all in one day. And we'll show you exactly how we came up with this trade, and so you can learn from the method and find the next one. This is the daily chart of copper. We had a very strong trend here, and this line is the 5-period simple moving average. When you get more than 7 closes on one side of the line, like here we have 1, 2, 3, 4, 5, 6, 7, 8, 9 closes up until here, that is called persistency of trend. This is a lot of research that Linda Raschke has done, and that's where I learned it from. So you got 9 trades here, and there's 2 aspects to this. One is the persistency, number of closes on one side. The other part is when you have bars that completely lift off the line, that's a show of momentum that typically, when you test back below, you get a close back above, because, with that kind of momentum, there's always somebody who missed out, and when they, or say a market maker that's short and, in the red, there comes a point where they're going to want to cover, and that brings this back up for that retest. So going into today, we already had this bias that we got a close below. This close below was on Tuesday, so the thought for Wednesday is, okay, this is a big red bar, test below, and then go higher. So you can also see here that before this fall off, up here on this date on the 18th, there was a divergence in the 2-period rate of change. That's what this is. This high is from this momentum that you see in this bar, and then the momentum up to here, you can just tell from the bar, is not as strong, and that's this right here. And when you get a divergence in the 2-period rate of change, that usually signifies a divergence on a lower time frame, like the 240 minute. So here on the 240 minute, which I only use the 2PROC on daily charts. To me, they don't make sense on a lower time frame. But here you can see 1 peak, 2 peak, 3 peaks. 1 peak, 2 peak, 3 peaks. So this is kind of our classic divergence with lower highs in the RSI and higher highs in price. So these are the 3 pushes, and that's what warranted this pullback here, this ABC rhythm. It's not a perfect ABC, but it's got the rhythm like that. And we woke up this morning. This is the 1 a.m. to 5 a.m. bar. This is your 5 a.m. to 9 a.m. bar. So this is kind of the mess that we're in when we get to our screen in the morning. When you take it down even further on a 10-minute, so we know that we want to buy, but you don't want to be a hero, because you could have bought here, you could have bought here, you could have bought here. You'd be underwater on all of this buying here. So what you do is you wait for a U-turn. A U-turn is a trend reversal. It's your basic definition of trend reversal from down to up, which is you make a high, make a lower high, higher high, and then turn up from there. So you can look at it as an ABC, which in a downtrend should then give you new lows. But when this ABC goes down and then takes out that high, that's your U-turn. So that U-turn came right at 7 o'clock above this 404.45, so call it 404.50. And that could have been an entry, but the entry we saw, and so U-turns often have what's called a gut check. Sometimes a U-turn can just go, and I've typically seen that more on U-turns that are going from an uptrend to a downtrend, because it just feels like things go down the elevator a lot faster than they do up. But on this U-turn, this extra move down here, I call that the gut check. So here, anyone who's reading structure knows that the trend has now changed from down to up, and so they should have faith buying on this pullback, whereas someone who's not reading structure just kind of sees this as an ABC or some sort of flag up, and they would expect to go get new lows. So they wouldn't really be buying down here. And we got, it just lined up very perfectly this morning that we got one more piece of confluence, and that is this thing called the anticlimax pattern. An anticlimax pattern just means that the low between this bar and this bar is less than the low between this bar and this bar, which is less than the low between this bar and this bar. So basically, for 3 sets of 2 bars in a row, the lows have been accelerating. The distance between the lows has been accelerating, and that's why it's called an anticlimax. So this green dot here indicates an anticlimax pattern. And the way you enter on an anticlimax pattern is you wait for a green candle, and then you buy above that green candle. And the stop is below the low of the anticlimax pattern. So in this case, you would have bought above 403.90 with your stop just below 403.30. Now, this bar, which got this green dot here, this could have had a green candle. If this had just come back up and closed here, right, you would have a green candle, and you would still have the anticlimax, because the only thing measured by the anticlimax is the distance between these lows, and the lows would not be affected. And if this was a green candle, then you would just buy above that candle. So there's 2 different varieties of that anticlimax here. In this case, we had a red candle, but then we had a green candle that followed. So if you, had bought here, and let's do this with the rectangle so we can see the scale of the risk and the reward, basically had 60 cents of risk, and we wrote it up to here, 409.40, and that's where we sold it. So if you could just envision, that's actually too big. The entry would be there to here, and the gain was here to here, and that works out to a little over 9R. And that's the trade we took. That's the trade we called. And of course, all of this stuff looks great in hindsight, but I'll show you our Discord server. This is the chat room. This is the trade desk for the silver copper, and this is the chart that, let me see, 7:42 a.m. 7:42 a.m. You've got this ABC drawn out. Got this thing here calling out a 10-minute U-turn, and then gut check with anticlimax. So basically, as that bar was forming, so that must have been the 740. I know this was 7, so 7 to 710, 710 to 720, 720, 730, 730, 740. So 740 to 750 is this bar right here. So 2 minutes into this bar, we posted this chart right here. And so you had 8 more minutes for this bar to complete, and then probably more time for it to trigger. And those are just the kind of things we do in our Discord channel, and then we follow up on it afterwards, once it's actually triggered. And actually gave a hoagie, so it actually gave a hoagie after that too. So we do follow up on it and get a little conversation there. But those are the kind of trades that we stock, and I'm very proud of our members that are learning our method really well, and sometimes they catch it before I do and point it out to me. So it's a great group we have there. I'll put a link in the description if you want to join our Discord. Keep in mind those links only last for 7 days, so try to get there quickly and sign in. But that's all I had today. That was on copper, and with those FOMC fireworks, hopefully there's more setups like this tomorrow.